podcast. I am your host, Eunice Ajim, and today we have a special guest that I'm super excited about. We have Dr. Ola Brown. She's a healthcare entrepreneur and founder of the Flying Doctor Healthcare Investment Group and a GP at Green Tree Investment Company. Flying Doctors Healthcare Investment Group is a sector specific company that makes VC and PE investment in healthcare. FDHIC also invests in and operates larger healthcare infrastructural projects. Green Tree, on the other hand, provides growth capital to some of Africa's most exciting tech startups in various sectors like fintech, media, SaaS, agri-tech, manufacturing, e-commerce, health tech, and education. So far, FDHIC has had two exits in the fintech space. Wow, Dr. Ola, I'm so excited to have you on the podcast today.
Thank you. Thank you. I'm really excited to be here as well. It's lovely to be able to connect. And I'm looking forward to an exciting conversation.
Yeah, definitely. I love to start the conversation with really just your journey. I mean, you have accomplished so much. I
Oh, thank
have been
you.
privileged to be on a panel with you. I have watched so many of your YouTube videos just educating everybody, right, about the VC space, the startup industry, the healthcare space. I mean, I did not even touch the surface of some of your accomplishment in your introduction. So I want you to just tell the audience, like, what is your story? Like, what is the story behind
Thank
Dr. Ola?
you. So my story is a bit weird and it's not straightforward because I actually started off life as a medical doctor. So people assume that I'm a doctor of finance or a doctor of economics, but my first degree was like in medicine. And they're like, what kind of medicine? Like, is it financial medicine? Like, I'm like, no, it's actually the give injection type of medicine. So I started off giving injections and drips. That was my first sort of career. And I did that for a year. And sadly, much to my parents' devastation, I realized that wasn't really what I wanted to do with the rest of my life. And I think a lot of people make a choice to do medicine or law and accounting or engineering because their parents are Nigerian. So, what other options do you have, right? With African parentry, you really have five professions, otherwise, you failed. And I just realized that really, well, at least practicing medicine on the wards for me just wasn't what I wanted to do. And I was practicing medicine in the UK as well. So I was born in the UK and raised in the UK. I'd actually never lived in Nigeria before. So that wasn't really the environment where I wanted to work either. And whilst I was in medical school, something really happened that changed my life. Um, and it's still difficult to talk about, even though, like, when I'm telling my story, I do talk about it. But when I was in my second year of medical school, my sister came, she was on holiday in Nigeria, and she was 12 years old at the time, and she got really sick. So we started struggling about with how to evacuate her to a better facility. And none of us had lived in Nigeria like sort of full time in terms of my family. For me, I'd never done, and for my parents, it hadn't done for a few decades. So we were struggling with what to do from the UK, just trying to call different people, and nobody seemed to have a solution. But we finally found an emergency services company in South Africa, which is like 7 hours away. And they were able to move her to a more suitable facility. So we started trying to put together that solution. And in that space of time, my younger sister actually died. Um, and because we were on the phone so much, and I was also working within the UK healthcare system at the time as a medical student, I just felt like even as a second year medical student with no license and didn't really know much about medicine at all, I, I felt like I had so many more resources at my own personal disposal than, like, a Nigerian hospital with consultants had at their disposal. And it was my first real exposure, I guess, to the disparities in healthcare between easy, like simple things that you could get in the UK, and like things that were just completely unobtainable in Nigeria, and having to like go all the way to South Africa to find like really sensible thing, like easy to find things in the UK. And it's not as if I was in London. I grew up in a tiny village in the UK. Like I grew up on it's called Lowestoft. Okay, it's a town, not a village. But it's the most easterly point in England. And I was the only black person there. Like literally when I started school, they had to explain what I was because so many people had never seen a black person before. So
That's
it
very
wasn't, it's not as if I grew up like in a sophisticated environment, even in the UK, but even in that environment, there were resources, healthcare resources available. So that kind of was a ghost that kind of haunted me throughout medical school. And then as I continued to learn medicine, every single lesson was framed in, well, this is all great, but there's so many people in the world that don't have access to this. So, and what could I do to kind of make impact in that way? So fast forward back to the story I was telling you, graduated from medical school. I just was really just thinking about Africa and what I could do. So I left the UK, moved to Japan for a while. That's a long story. But anyway, I ended up in Lagos and started an emergency services company. Um, and today that company has responded to over 5,000 emergency requests across the continent, worked in 47 out of 54 countries in Africa, and continues to grow, opening up a new office in a new region next year. Really proud of what they've done. So I worked there for a few years doing running that company and building a team. And things all changed when my friend, who could see the company was doing really well, asked me to be an LP in his first fund.
nice.
And I'd already been looking at the tech space and thinking, this is really exciting. But the opportunity to be an LP and be a director was something that I didn't want to pass up. And he promised me that it would take a very small amount of my time because, I was running this company. So I wrote my first LP check. We raised the fund, we closed the fund, and then started getting ready to make investments. Unfortunately, he had a medical emergency and had to move back to the UK. So that kind of left me and the rest of the directors like running the funds because we couldn't like just go back and return the money. So he asked me if I'd take over running the funds. Um, and really said, that I'm not sure that I can run a fund. I'm a doctor and I've run a business, but and we'll come back to this sort of debate later around founders and operators versus, finance people. But I'm like, I'm not a financial person. You're the finance person. But we had strong finance people on the board, including probably one of the strongest people in finance in the whole of Nigeria. One of the country's best economists was on the board. So I felt like safe enough to do it. So I transitioned into making investments that way. So that's a really odd way into venture capital. So we made investments out of that fund. I had a lot of fun, did a master's in finance during that time, and really started setting my path on a different trajectory. Did a second funding vehicle, and because of my learnings from the first, I mean, even with this fund, Green Tree, 50% of what we raised was invested in fintech. So was one of the first, if not the first, institutional investor in Paystack, for example. Did a few other fintech related deals. So got really into the fintech space in terms of helping fintechs grow. And obviously, I was working academically in the fintech space, doing a lot of research because of my degree in finance. So I thought, this is an area of expertise. And we also did a few healthcare deals. And obviously, because I'd run a healthcare company before, I'm presently on the board of that healthcare company that I founded. I felt like these are my two areas of expertise. And some of the others, like we did software, we did, we looked at agri-tech deals, we looked at like, all kinds of different deals. And I thought, these are my two strongest areas. So taking it forward, these are two really big problems. across the continent. And these are things that I am really good at. I can build a team around this, and this is what we're going to focus on. So we did second fund, and that was just focused on fintech and health tech. Did very well with that fund. Did a third fund focused on fintech and health tech, and now we're raising our fourth fund, which is going to be a $20 million fund, which is focused on, again, fintech and health tech. I think, we're developing expertise in deep subject matter expertise in those two really significant problems that I think it takes a lot of expertise to kind of crack from a VC space. And we wanted to be really, really focused on that. So that's a bit about my story and sort of how the multiple career transitions I've had. And yeah, where I am now.
Wow, that was a lot. Thank you so much for sharing your story, because I truly believe that there's always a reason behind why people do what they do.
Mm.
And in your experience, right? Like, I feel like, I mean, you left the UK and eventually moved back to Nigeria. And your sister was, it seems like she was a defining moment for what your career path became. And then it just happened that somebody said, "Hey, how about you become an LP?" And then before you realize it, you're a GP. Like, that is such an amazing story. And wow. It takes a different kind of human to be able to accomplish what you've been able to do, Dr. Ola. I think, like, what I really want to be able to understand, like, really dig in. Out of your fund, you have been able to make two exits. Not a lot of African focused VC can say that about their fund. What would you say you look at, or like, how do you approach investing in African tech startups? Like, what is the secret sauce?
So my first fund did a 25% IRR. So it places us not just in the top African funds, but actually top funds in the world. And what like the it's an interesting question in terms of what my approach is, because my approach has evolved. So I think that I've gone from being, a generalist, which was nice and enjoyable, and obviously a lot of people still do that, to more a specialist approach. So, one of the things that we've always done is think about exit from the beginning. So think about potential people that might buy this company from the moment that we're investing. And I feel like African startups have African investors have a much harder job than investors in Europe, say, or in America, because I think it's a much more hands-on job. So the American economy is structured so that companies almost naturally grow without much intervention from investors, to be honest. The economy is growing. And literally, maybe I go to America once or twice a year, but I still, when I land in Atlanta, because it's only that Delta flight that goes from Lagos to Atlanta, I still like look out the window and say, wow, this is a country. Like, I'm still, I get impressed all over again about the size of the economy that has been built. And this is, what um, I'm excited about being a very, very small part of building in Africa. And one of the things I always remember is what kind of capital built that economy. And if you think back in terms of history, it was actually capital from Europe. And that money had to be moved from Italy or Spain or wherever into London or Paris. Those were the financial centers, physically in coins and notes, and then transported physically on a ship, where, bankers or representative of bankers like JP Morgan or like any of the initial like sort of famous American bankers would then collect it in cash and write a letter that would take, weeks to get back to the UK to say, okay, we've got the money and we're going to invest it in railroads or whatever. And then, when he made a profit, he would transport that money physically back on a ship to the investors in Europe. Um, so when I think about America, and I get amazed at Atlanta Airport, I think that capital built this, investors built this, people that were willing to take a bet on somewhere that they had never seen. A lot of those European investors had never traveled to America, never been to America, just knew that they were reliable investors. And the reason why JP Morgan made such big name for himself in banking was because he was the person that they saw, at least in Europe. He used to travel around, so people could see him face to face and know, okay, there's one American somewhere that will collect our money and is trustworthy. And when we take all this money across the sea, he's the guy that's going to collect it. And in the same way, I think, I think about that a lot and think about how we can build a better continent through innovation and lift people out of poverty. So my approach, first of all, is one of passion and impact, and then one of being really, really hands-on and specialist as well. So specializing helps me in terms of having the contacts, because we run a Pan-African organization. I built up a pretty big Rolodex of ministers for health, of diagnostic centers, of hospital owners, of pharmaceutical manufacturers, etc., that I can bring our portfolio companies into that network. And the same with fintechs, from regulators to security and exchange committees, on the government side, to partner banks, for instance. I help a lot of banks with their strategy anyway. So to African banks, to all of the partners across the value chain that they'd want to be working with. So we feel like a big value add is business development, and helping them to market their companies, helping them to get the right strategic partnerships across the continent. And then another thing that we do is also start thinking about exits early and start thinking about pricing early. Just because Microsoft is going to buy a company for 16 billion doesn't mean like Aliko Dangote or Tony Elumelu, they don't even have that kind of money to begin with. They're not even worth 16 billion. So the kind of companies that would acquire a technology company in Africa are a bit different. And that means that we need to be careful around pricing and valuations. And it means that we need to start thinking about exits from the beginning. And we need to think about fundamentals as well, like how fast is this company growing? How can we help them? How can we get them the right talent? How can we make the right introductions for them to maintain that pace of growth? And how can we start planning for exit and thinking about exits? And the reason why venture capital on the continent is so unique, I guess, is also because probably about 20% of America, 20 to 30 of American startups that are invested in actually exit via IPO. And in Africa, I don't think there is a stock exchange really that is liquid enough for those kind of IPOs. So we're doing a lot of work in the background to develop our local stock exchanges, and maybe I'll talk about that a bit later. But for the meantime, it is strategic acquisitions, and that's why a majority of exits actually happen where there are large corporates. So in South Africa, a majority of exits happen in South Africa because number one, the valuations are lower, and number two, there are a lot of large corporates. So if you look at corporates that have revenues of over $500 million or more, which is quite small, to be honest, then over 50% of them are in South Africa, and the rest are scattered across the continent. So I think if I was to say sort of four things, number one, coming from that perspective of impact and being driven by something other than financial returns is really important. And I'm driven by just landing in America, and every time that country taking my breath away and saying, look, they built this economy, they built this country, they fixed their infrastructure, and people thrive. I always see, this CNN where they're saying, but there's problems. But for the most part, people are thriving in America, and I want to see that on my continent as well. So the first thing is coming from a place of impact and passion. But then secondly as well, from a technical perspective, making sure that we have the right relationships for business development, making sure that we have the right relationships to put a CFO in place, to put a CMO in place, to help people get the right talent. and then also really thinking about exits early and giving advice on valuation, and also having a wide network of other investors that can co-invest with us and also sort of invest alongside us or even after us in subsequent fundraisers.
Wow. I mean, you said a lot. So many things that I'm trying to like think of what she said. I'll say the first one, and I know we had a conversation a little bit about it earlier, which was really revolving around some of the varying level of infrastructure and market maturity across different African markets. We spoke about Rwanda, and I was just there last week, and I thought about my experience and how it felt like it was really great. But then you mentioned the GDP per capita, right, still makes it a very difficult country to live in, despite all the great things that they're doing, versus Nigeria, right? That population is there, right? The hustle is there, but still faces so different levels of challenges. And you spoke about South Africa. So like in your perspective, just given your knowledge of the African market, like how do we overcome some of these infrastructure and market maturity to get us to the level that we want to be? That's one. The second one is about exits, right? Like this is something that comes up more than I want to accept. The level of exits and valuations. I do still feel like when I look at valuations in Nigeria, and I'm not gonna lie, they're trying to compare themselves to America, and I'm like, no, like yes, like we're here, but like you can't come and ask me for similar valuations that a US company, sometimes even more, right, will require for their business. First, given the amount of capital that we don't have access to, first, right, like we're really hustling every single day to like get capital from US and Europe and all these other countries to invest in Africa, but there's still a certain level of valuations that has to make sense for the expected exits in the next 5 to 7, 10 years, um, and also the fact of not really having a lot of IPOs, right? Like one of the, I mean, like a good 20 to 30% IPOs or exits in the US, actual IPOs, but should Africans be thinking about IPO in the US? Should they be thinking about IPO in South Africa? Right. And also when it comes to exit, would it be intracontinental exits or would it be, outside money coming and exiting or buying, these African tech startups? I mean, you said so many and I really want to dig into every single one of them. Just I mean, I respect a lot your opinion in this particular area because I know the amount of research and amount of work you've done. So if you could just maybe break down from how do we overcome some of these infrastructural challenges? So, like what to get us to like, better investments, and eventually, right, like what do we look for or like how do we get to the stage where we see more exits, whether it's being M&As or IPO.
Okay, so I think the first question was around market maturity.
Mhm.
And then the second question was around, um, the first question was around market maturity. The second question was around exits, and they're both really related. So I'll start with market maturity. Now, in terms of market maturity, actually, I think that American investors and European investors actually underestimate rather than overestimate market maturity. So when I ask the typical American investor, how many companies on the continent do you think make over $1 billion? They say like 20 or maybe 30 or 50. I'm like, the answer is actually 400. So we do have 400 companies with revenues of $1 billion or more. Um, and so the market maturity is not as bad as a perception. I think there's a perception and reality gap there. But that said, most of those companies are in South Africa. So, I think I can't remember the exact number, but probably about 50% of them are in South Africa, and the rest are in other African countries, including obviously the other big four countries, so Egypt, Kenya, Nigeria. So in market maturity, we're not as bad, but when you look at a more micro level, you're looking at consumer patterns, for instance, and people tend to say, "Oh well, what's possible in Nigeria, what's possible in India is probably possible in Nigeria." And when you look at the micro data, that's not entirely true. So when you look at tier one people, and when I say tier one people, I'm not talking about their access to dignity or making them better than other people. I'm talking about purely about household earnings. Um, when you look at tier ones, which is $9,000 and above, then you have almost 100 million people earning $9,000 and above in India. Let's compare that to Nigeria, where you have about 2 million. So, in terms of ability to buy, that's where Nigeria kind of faces its problem. Nigerians, the average that Nigerians spend on food, for instance, is 60% of income. In some areas of Nigeria, it's 70% of income. In some areas of Nigeria, it's 100% of income. So compare that to an America, say, where they spend 9% of their income average on food. They have a lot more to spend on Amazon and apps, and they've got a lot more disposable income. So in terms of market development is key, and that's why apart from doing VC, we also do infrastructure investment, because we think being able to build the technology ecosystem that's important to us. Really, we need to build the country, or we need to build the continent. And another answer to that, and an area that I'm always looking at, is software for export, people building for other markets, etc. And that's something that, like, if you look at Israel, for instance, that's something that the Israelis have kind of mastered. It's a small country, population very small, but almost all of the tech products are actually built for other markets. So that's really interesting, and that's something that a business model that's really interesting to us. But it's almost inescapable. You can't build everything for other people. It's almost inescapable that the need to build for the local market. And that means looking at infrastructure plays, looking at tech-enabled plays, looking at what I call full stack plays, where you have, outlets combined with tech to be able to attract customers, and also really, really being honest about the size of the market. So saying that, yeah, there's a market of 200 million people, 60% of those people earn less than $3,000 a year in Nigeria. Nigeria has more people living below the poverty line than any other country on earth. So we have more poor people. Even though India has a population of over 1 billion people, we have more poor people than India, and India has more rich people. So in terms of market maturity, we need to, when we're building for the African continent, we need to be very, very, very thoughtful about the size of the actual market, and very honest about the size of the actual market. Things like disposable income, and also bearing in mind getting an acquisition from Microsoft and getting an acquisition from Google and getting an acquisition from maybe Tesla is great. But when you're thinking about valuations, I always think, would Tony Elumelu pay this? Would Dangote pay this? Would Jimovia pay this? Because when we look at South Africa, sorry, I said 50% of acquisitions on the continent. I meant 30% of acquisitions on the continent are from South Africa. So why do they take so much of the exits? Because they have corporates. Number one, the valuations in South Africa are more reasonable, but they also have more of these corporates that are not owned by single men anymore, that are multinational corporations that can pay those kind of prices. So even if you look at the Johannesburg Stock Exchange, for instance, the Nigerian Stock Exchange, the valuation of all the companies on the Nigerian Stock Exchange currently is probably about $40 billion. maybe slightly higher. I haven't checked, and the exchange rate is a moving target. So now it's at 800. Probably by January it will be 1,000, and that means the valuation of the stock exchange is different. But I'll say around that $40 million mark. Um, so when I ask people, what do you think the Johannesburg Stock Exchange is worth? They say, oh well, it should be double what Nigeria is worth. So they say about 80 billion. Some people say it should be triple, it should be about 120 billion. It's 900 billion. So think about the difference in the number of large corporations, listed corporations that you have in Johannesburg compared to the Nigerian Stock Exchange. And then you see why they have most of the exits. So in terms of market structure, I've spoken about companies that build for export, companies that build for other markets are always good. I think that future of work, companies like Andela, for instance, have been very successful at utilizing African talent, cheaper African talent for global players. There's a company that I invested in called Outschool, for instance, that has a similar business model, but this isn't for computer programming. This is actually for services, legal services, financial services, etc. So that's super interesting as well. But I don't think we can continue for every startup to be built with other people in mind. I think there will be some for the local market, and these are just things to consider when you're thinking about the local market in terms of market maturity. And on the exit side, I just think that, all investors need to be really super careful about valuations. And, think about, like I said, think about Microsoft, think about Google, think about Amazon acquiring the company, but also think Dangote.
Wow, that was so beautifully said. You have really educated us a lot on the African market on this podcast, Dr. Ola, and I really appreciate it. If there's one thing, and a lot of this podcast is about, really we understand the realities of the African market, but we all have big dreams for where it can be, right, in our lifetime. And I like to end this podcast with a question on what is your African dream? Like, what is it that you're working every single day and hope to see during your lifetime on this earth in terms of the African continent?
So, China lifted 1 billion people out of poverty in a space of a few decades. And they did that primarily through investment. I mean, GDP is about being able to export, it's about being able to consume, it's about investment, and it's about the government's ability to spend. And investment is a really big part of that. So the more investment that comes onto the continent, the more people we're likely to lift out of poverty. And right now, we contribute probably about 15% of the world's population, but we only get 1% of the world's trade flows and investment flows. So that's a huge disparity. And I really do think that the investment approach to development is focused not on poverty alleviation, but really on prosperity creation. And I think that that's a much better approach to look at development on the continent. So, in terms of what I want to see, I want to see 1 billion people on the continent lifted out of poverty. And it's not a dream, it's happened before. And it's happened before in a place that, the GDP per capita 30 years ago was lower than a lot of African countries. So it is possible for countries, for continents to lift themselves out of poverty through and develop. And one of the main sort of pillars of that development is always going to be private sector investment. And I'm just really, really excited to be a small part of that. But what keeps me going is this idea of creating a better Africa through that pursuit of prosperity, and making the African dream look a bit more like the American dream.
I love that. Thank you so much, Dr. Ola, for joining us on the Leave the African Dream podcast today. This was an amazing conversation. man, we didn't have enough time to go through all the questions that I had planned. But we're definitely going to be having you on another session in the near future because you have a wealth of knowledge that I truly believe more people need to know about. Thank you again so much for joining
Thank
us.
you. All right, take care. Bye bye.
Yes, and until next time, I will see you guys again.